Welcome back to the channel, investors. We got some great updates on ChargePoint stock as they announced some very favorable news during their latest earnings report. I'm going to cover all that and much more here today. But before we get started, make sure you touch that like button and subscribe so you stay up to date on the latest news so that you can make informed choices. Let's just quickly go over ChargePoint's business model and to refresh our memories that ChargePoint is aiming to become the focal point of wherever EVs are. They realize that people are going to be parking at shopping centers, they're going to be shopping at work, at home, and they know that EVs will eventually have to be charged. So ChargePoint tries to provide the software at charging stations for people to be able to fill up their car, not with gasoline, but with electricity. They follow SaaS or subscription as a service business model, which typically has pretty high margins. ChargePoint keeps raking in those monthly reoccurring revenues for customers to use their services, similar to other companies such as Spotify or Disney+. Now, some key highlights of ChargePoint is that they have 7x more market share than their closest competitor in North America. Of course, that gap should close over time, but right now ChargePoint is running away with the lead, doing circles on the competition. Now, the company has been around since 2007, which is well before anyone ever dreamed of Elon Musk and his self-driving cars. They already have over 118,000 locations to charge in North America and Europe combined, which means somebody is charging into the ChargePoint network on average every 2 seconds. The world and its governments continue to push for a more green future. ChargePoint has collectively avoided around 462 million kilograms of greenhouse gases. We're going to talk more later on why this is so important. In terms of their actual earning results, ChargePoint was basically on par. The street anticipated earnings of around negative 12 basis points, and ChargePoint reported negative 13 basis points. So it's going to say it missed expectations by around like 10%, but really it was right on par with what the street expected. Now, this is only their second ever earnings call as a public company. They posted revenues of $56 million this quarter, which is a 61% year-over-year increase from last year. So I love to see companies like this make those big leaps in these growth stages right now. ChargePoint also raised their full year guidance by 15%. Now we can anticipate anywhere from $225 million to $235 million. It's always great when a company raises their guidance and doesn't lower it. They also completed their acquisition of Viri City, which is a leading fleet vehicle management provider. Now this should provide ChargePoint more options to continue to strengthen the reach of e-bus and commercial fleets. Think about all the trucks that are out there right now helping transport goods and services. Imagine all those gas-powered trucks now being powered by electricity, being EVs, and now needing a place to charge all over the United States and the rest of the world. Also, this past quarter, they agreed to a strategic partnership with Mercedes-Benz. So this should allow for powering luxury sedans and other mobility products for Mercedes-Benz users through their apps. Now let's talk about why there's so much legislation that favors EVs and should benefit ChargePoint. The CEO of ChargePoint even said that the success of this company is directly tied to the integration of more EVs on the road. Well, according to Bloomberg, North American EV sales were up 97% year over year, and in Europe, they were up 153%. So every new EV that's out there that gets sold, that's another potential customer for ChargePoint in its arsenal of chargers. Some additional big legislative news is that the Joey B administration issued an executive order calling for half of all new vehicles sold by 2030 to be zero emission. And in Canada, Justin Trudeau, the administration basically set a goal of 100% zero emission sales by 2035. So the two big powerhouses in North America are already making plans on how they can get more electric vehicles out there, which should mean more potential customers for ChargePoint. In Europe, the EU announced set policy rules to meet 55% reduction in emissions by 2030. So this essentially gives a blueprint to transition to EVs. Now, it's not just governments that are getting on board with this, but also car manufacturers, as they're starting to showcase more and more of their new electronic vehicles in development. But the big news and the reason why investors are getting really excited is that in the recently passed bipartisan infrastructure bill, so this one included $7.5 billion to expand charging. Now, our taxpayer money goes towards so many stupid things. But let's be glad that we have some of it now actually going toward something important. Also, there is a $3.5 trillion budget bill, which includes instructions on how to change the tax code to incentivize owning electric vehicles. So states have a lot of power in how they distribute federal funds. For example, California included in their state budget nearly $4 billion towards zero-emission EVs and charging incentives. So certainly no corruption ever happens in California, so I'm sure that's going to work out just great. Basically, my key takeaways from this is, as a company, ChargePoint is doing a really good job growing its customer base. It's making acquisitions, making partnerships, but this is still very early in the ball game. This is maybe the third inning, and the real profits, they won't come in until more and more people start exchanging their gas-powered cars for electric vehicles. And the government incentives and money and the requirements, they're only going to help. This is also a company that faces immense pressure with competitors in Blink Charging, EVgo, among many others. But ChargePoint is also considerably down from its 52-week high of 49.48. This was before even when they actually completed their merger. SPACs in the second half of 2021 have just been absolutely getting destroyed, so there's just been a massive sell-off on SPACs in general. Potentially ChargePoint could be at a fair value here. And I do have some really good news, is that the analysts who cover ChargePoint, it's their job to follow all the ins and outs of ChargePoint, so they really should know what they're talking about. And they are actually really bullish on ChargePoint. Out of 10 analysts, 8 of them have ChargePoint as a buy, and none of them have it as a sell. Their consensus price target is around $34, which is nearly 55% higher than it is today. 2 analysts have actually already changed their price target since earnings. And yes, on the surface, it looks like they are lowering their price target from what it was before, going from $40 to $36, but that still means analysts think that there's currently 70% upside from the price that ChargePoint trades at today. So this is a newer company. The market cap is just around $7 billion. Expect there to be a lot of market volatility. That's why the stock price went up 12% as earnings were being reported, and then they just gave it right back following days after. All I know is that I have personally been making very good returns and a lot of money doing the wheel options trading strategy on ChargePoint. But let me know if you're bullish or bearish on this company in the comments below. I appreciate all of you who listen on the Collect Cash podcast. Be sure to leave a like on this video, as it does take a lot of time for me to put it together, and make sure you're subscribed. And as always, don't forget to buy, stash, and collect cash.